Please be seated. Ladies and gentlemen, welcome to the 6th Indonesian Finance Association International Conference. We would like to welcome the Honorable Vice Chairman of Board of Commissioners, Indonesia Financial Services Authority, Mrs. Nurhaida. Also present with us, Member of Board of Commissioners, Indonesia Financial Services Authority, Mr. Heru Kristiana, Mr. Hussein, Mr. Riswinandi, Mr. Ahmad Hidayat, Mr. Tirta Segara, and we would like to also welcome founding editor of Pacific Basin Finance Journal, University of Hawaii, Professor Gonri, President of Asian Finance Association, Professor Robin K. Chow, Chair of Advisory Board Indonesian Finance Association, Professor Eduardus Tandelilin, President of Indonesian Finance Association, Professor Irwan Adi Ekaputra, Scientific Board of Indonesian Finance Association, Dr. Leo Indra Wardana MSc, President Director of Indonesia Stock Exchange, Mr. Inarno Jayadi, Board of Commissioners and Directors of Self-Regulatory Organization, stakeholders in the capital market, all of the invited deans, lecturers, students, and academics. Thank you for joining virtually. We could not be more grateful for the spirit of the participants in this year's conference. Although we could not meet in person for this event, we are sure all of you will still benefit and gain knowledge from the conference. We also hope that it could enhance Indonesian financial scholars' contribution to the international academic landscape and participation in advancing the financial literacy and policies in Indonesia. Before we begin, we will have a prayer recitation. Mr. Abdul Aziz, you may lead the prayer.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi ta'ala wabarakatuh.
Waalaikumsalam.
Salam sejahtera untuk kita semua, Ibu Bapak serta segenap hadirin yang saya hormati, yang berbahagia. Izinkan saya mengajak Ibu Bapak sekalian untuk bersama-sama kita menundukkan kepala dan hati kita. Kita berdoa sesuai dengan agama dan keyakinan kita masing-masing. Kita bermohon dan bermunajat kehadirat Allah Subhanahu wa Ta'ala, Tuhan yang Maha Kuasa, agar kegiatan yang kita lakukan pada hari ini dapat berjalan dengan baik, tertib, dan lancar dari awal hingga akhir. Kita juga berdoa agar bangsa dan negara kita selalu dilindungi, diberikan keselamatan, kedamaian, serta keberkahan oleh Allah Subhanahu wa Ta'ala, Tuhan yang Maha Esa. Distinguished ladies and gentlemen, allow me to lead this morning prayer in a Muslim way and majority in Bahasa Indonesia and Arabic. Berdoa dimulai. Bismillahirrahmanirrahim. Alhamdulillahi Rabbil Alamin. Hamdan syakirin, hamdan naimin, hamdan ni'amahu wa yukafi mazidah. Ya Rabbana lakal hamdu kama yanbaghi li jalali azika azimi sultanik. Allahumma salli ala Muhammad wa ala ali sayyidina Muhammad. Allahumma inna nas'aluka salamatan fid din, wa afiyatan fil jasadi, wa ziyadatan fil ilmi, wa barakatan fil rizki, wa taubatan qablal maut, wa rahmatan indal maut, wa maghfiratan ba'dal maut. Allahumma hawin alaina fi syakaratil maut wan najata minan nar wal afa indal hisab. Ya Allah, ya Tuhan kami, ampuni segala dosa dan khilaf kami sebagai hamba-hambamu yang lemah. Ya Allah, ya Tuhan yang Maha Pengasih dan Penyayang, limpahkanlah berkah dan anugerah-Mu untuk kelancaran dan ketertiban kegiatan yang kami lakukan pada hari ini. Jadikan kegiatan ini penuh dengan manfaat dan karunia yang menjadi bekal kami melangkah di hari ini dan hari-hari yang akan datang. Oh Allah, we ask for you all good, good now and good later, and what we know to be good, and what we don't, forgive us as weakened human beings. Ya Allah, Tuhan yang Maha Melindungi, lindungilah kami semua. Lindungi negeri kami tercinta dari pandemi COVID-19. Bebaskan negeri kami dari musibah pandemi COVID-19, ya Allah. Sehingga kami dapat melanjutkan kegiatan kami, terutama di bidang perekonomian dan keuangan. Satukan hati kami dalam persaudaraan sebangsa dan setanah air. Jadikan negeri kami negeri yang baldatun thayyibatun warabbun ghafur, negeri yang gemah ripah loh jinawi, negeri yang tentram dan makmur serta subur tanahnya. Ya Allah, Tuhan yang Maha Bijaksana, limpahkan hikmat, kebijaksanaan, dan kearifan kepada para pemimpin kami. Juga limpahkanlah hikmat dan kebijaksanaan dan kearifan kepada para pemimpin di tempat kami berkarya. Berikan mereka semua kesehatan, kekuatan, keselamatan, serta kebaikan dari sisi-Mu saja. Ya Allah, Tuhan yang Maha Pemberi rizki, limpahkanlah kepada kami semua rizki yang halal dan berkah. Sehatkan jasmani dan rohani kami, serta berikanlah keselamatan dan kelancaran pada karya pengabdian kami. Mudahkan semua urusan kami dan kehidupan bersosial kami, dan jadikan kami semua sebagai hamba-hamba-Mu yang Engkau mampukan untuk menjadi saluran berkah dan hidayah bagi sesama kami. Ya Allah, Tuhan yang Maha Adil, kami mohon di hadirat-Mu, golongkanlah kami semua ke dalam golongan hamba-hamba-Mu yang senantiasa pandai mensyukuri semua nikmat dan anugerah yang telah Engkau limpahkan kepada kami. Rabbana atina fid dunya hasanah wa fil akhirati hasanah wa qina adzabannar. Walhamdulillahi rabbil alamin. Thank you very much. Wassalamualaikum warahmatullahi wabarakatuh.
Thank you, Mr. Abdul Aziz. So, ladies and gentlemen, we will start today's event by opening remarks delivered by IFA President. Please welcome Professor Irwan Adi Ekaputra.
Thank you, Yolanda. Assalamualaikum warahmatullahi wabarakatuh. Selamat pagi, salam sejahtera buat kita semua. Bapak, Ibu, hadirin sekalian, izinkan saya menyampaikan sambutan ini dalam bahasa Inggris untuk agar kita dapat memahami apa yang disampaikan. The Honorable Ibu Nur Haida, the Vice Chair of the Indonesian Financial Services Authority, Board of Commissioners, Member of the Board of Commissioners, the Indonesian Financial Services Authority, Bapak Heru Kristiana, Bapak Hussein, Bapak Rizwinandi, Bapak Ahmad Hidayat, Bapak Tirta Segara, Bapak Dodi Budiwaluyo, Bapak Inarno Jayadi, the President Director of the Indonesia Stock Exchange, Board of Directors and Commissioners of the Indonesia Stock Exchange, Board of Directors and Commissioners of the Indonesia Central Securities Depository, Board of Directors and Commissioners of the Indonesia Clearing and Guarantee Corporation, Professor S. Gondry, the founding editor of Pacific Basin Finance Journal, Professor Robin Chow, the President of Asian Finance Association, Professor Eduardus Tandelilin, the Chair of the Indonesian Finance Association Advisory Board, conference presenters, participants, and distinguished guests. The world is changing and it is changing fast. The COVID-19 pandemic has proven to be a far greater crisis than just a health crisis. The COVID-19 is affecting economies on a different scale from country to country. It will likely increase inequalities on a global scale. Our choices and actions that we make today will affect the economic development trajectory in years to come. Therefore, the 6th Indonesian Finance Association Annual Conference has rightly chosen the theme COVID-19, Current Challenges and the Future of Financial Market. We have seen how financial markets react to the pandemic, the financial uncertainties. COVID-19 has forced governments around the world to close borders, people to social distance, and limit travel. Hence, many businesses face declining revenues and even bankruptcy. To combat the damaging effect, financial authorities and policymakers around the globe have initiated fiscal and monetary stimulus programs. Steadily, we witness how stimulus such as credit facilities, government guarantees, lower interest rates, and other fiscal and monetary packages have kept the financial markets afloat. Hopefully, Through our conference, we will uncover some of the current challenges that some countries still face during this period. But most importantly, we will learn whether certain research and studies can suggest policies to revive a bright future for the financial markets. We hope that you will find our conference a beneficial event, one that enables you to share and discuss with your international colleagues and relevant and appropriate for the country. Ladies and gentlemen, this event will not be a success without the close collaboration between the Indonesian Finance Association and the Indonesia Stock Exchange and the support of the Financial Services Authority, Indonesia Central Securities Depository, and the Indonesia Clearing and Guarantee Corporation. We are happy and proud that this year's IFA conference is in conjunction with the 43rd anniversary of the Indonesia capital market. We have selected 66 high-quality papers from 11 countries to be presented and discussed. For this, we thank all researchers and academics for your contributions. To end this remark, please allow us to acknowledge the hard work and contribution of several people involved. We would like to thank Bapak Inarno Jayadi, Ibu Risa Rustam, Bapak Wilianto Aji Sadono, and the IDX team for their relentless support and contributions. We also thank Dr. Leo Indrawardana and the IFA team for organizing all the details in this new normal way of organizing a conference. Last but not least, we would like to thank our colleagues, Professor Escondri and Professor Robin Chow, for their willingness to share their work in this conference. Finally, please carefully follow the instruction of the organizing committee to ensure that you enjoy the virtual conference in the best way possible. Thank you and have a wonderful and fruitful conference. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you, Professor Irwan Adieka Putra. And next, we will have a speech by the President Director of Indonesia Stock Exchange, Mr. Inarno Jayadi. The time is yours.
Thank you, Yolanda. Honorable the IFA Organizing Committee, honorable speakers, Vice Chairman of the Board of Commissioner of Indonesia Financial Services Authority or OJK, Ibu Insinyur Nurhaida MBA, and the other commissioner, Pak Tirta Segara, Pak Heru Kristiana, Pak Rizwinandi, and also Pak Ahmad Hidayat, founding editor of Pacific Basin Finance Journal from University of Hawaii, Professor Gondry, distinguished Professor Finance from National Cheng Chi University, Taiwan, Professor Robin Chow, IFA President, Professor Irwan Adi Eka Putra, Chair IFA, Professor Ted Tandelilin, distinguished guest participants, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh. Good morning to all of you. First of all, I would like to thank Indonesia Finance Association for organizing and collaborating with IDX to hold this event. I'm very pleased to meet all of you in this webinar, which today has become a common and standard practice. COVID-19 pandemic continues to change everything about life and work as we know it. Virtual gatherings, remote learning, telemedicine, work from home, all of the things that we have been made possible for us through technological advancement, which in turn have helped us to have a sense of normalcy during this challenging time. These new normal conditions call for vigilance, so each and every one of us must do what we can to keep ourselves and others safe by following COVID-19 guidelines on social distancing, mask requirement, and frequent hand washing. Looking at the conference agenda with 66 parallel sessions with topic ranging from capital market investment, banking, COVID-19 impact and responses, and of course, sustainable finance, I'm very sure that we'll have an exciting 1.5 days ahead of us. I hope it will facilitate meaningful discussion, exchange valuable insights, and provoke new ideas to solve current pressing issues caused by the pandemic. So please allow me to kickstart the conference with the key updates about current Indonesia capital market condition, recent developments and issues in Indonesia capital market before a keynote presentation from Ibu Nurhaida. As you may have noticed, the first half of 2020 has not been good for a majority of our listed companies. Their businesses and operations have been affected by pandemic, which is reflected in their stock prices. Up until yesterday, the Jakarta Composite Index, or JCI, has dropped 19.7% year to date and wiped out around 125 billion US dollar from investors' wealth. While in US market, in this case, S&P 500, we have seen aggressive market activities which made them so far the only market in the world still have positive growth among exchanges with more than 100 billion US dollar in market cap. The main reason is the impressive stock performance from the top 5 US tech companies, namely Zoom, Microsoft, Amazon, Facebook, and Alphabet Google, which have grown at least 30% since the beginning of the year. The inevitable force fast over was 9.1 trillion rupiah per day, while currently we are only at 7.9 trillion rupiah per day year to date. Here, we look deeper at each sector. On the left-hand side, the sectoral indices performance, with the least performing sector is property and real estate. And the best performing sector, which is consumer goods, with year-to-date performance of minus 7.9%. In the middle and on the right-hand side, we can see the Indonesia listed company first half of 2020 combined financial performance by sector. In terms of revenue, the agriculture sector seems to have beat the odds by outperforming the first half 2020 year-on-year growth. However, after inspecting closely, up to 61% of listed companies in this sector stated loss. Some of Indonesian government policy impacting companies in this sector are the implementation of B30 biodiesel and the food estate policy to enhance the country's food security during this pandemic. We can see the consumer goods industry in terms of revenue only declined 1.8% year on year, and net income decline of only 6.2% year on year. On the supply side, we also noticed that high market volatility due to the pandemic did not discourage companies from entering the capital market. There were 46 new listings took place since the start of the year, which made the total number of listed companies to 709. On the demand side, despite of the large-scale mass movement restriction, or what we call PSBB, being imposed, we are still seeing a 26% new investor growth this year to 3.1 million, of which 1.3 million are stock investors. During this pandemic, we too have been forced to adapt many adjustments to our activities and services, fast-tracking our digital transformation and embrace new ways of working to enable us to provide online services to our stakeholders. For example, education and literacy activities for investors and potential investors, socialization to capital market stakeholders, IPO workshops are now conducted online. Until the end of August 2020, we have conducted more than 3,500 education activities with almost 800,000 online participants. Distinguished guests, participants, ladies and gentlemen, to close my speech, I hope that we'll have informative and fruitful discussions in this international webinar and hopefully brings you insights and useful knowledge. Thank you for the time and the opportunity. Wassalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam. Thank you, Mr. Inarno Jayadi. Ladies and gentlemen, we will continue the event with the keynote presentation and opening of the conference by the Vice Chairman of Board of Commissioners, Indonesia Financial Services Authority. Please welcome Mrs. Nurhaida.
Thank you very much, distinguished guests, founding editors of Pacific Basic Finance Journal, University of Hawaii, Mr. Professor Gonri, my fellow Board of Commissioner of OJK, Pak Hendru Kristiana, Pak Hussein, Pak Desmond Nandi, Pak Ahmad Hidayat, dan Pak Dodi Budiwaluyo, President of Asian Finance Associations, Professor Robin K. Cho, Professor Irwan Adi Ekaputra, President of Indonesian Finance Association, Mr. Inarno Jayadi, President Director of Indonesia Stock Exchange, and also Board of Directors and Board of Commissioners of Self-Regulatory Organization, Mr. Eduardo Standalilin, Chair of IFS Board, esteemed lecturers, scholars, practitioners, participants, ladies and gentlemen. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam.
Very good morning and warm wishes to all of us. First, I would like to appreciate Universitas 11 Maret, who has organized this annual international conference and successfully invite prominent speakers from 13 countries. Also, I would like to welcome to all global participants who have been able to join our discussion today. Today's topic about COVID-19, current challenges, and the future of financial markets. This is a very relevant topic to the current condition that we have because the whole world now is experiencing this pandemic. Amid this pandemic, we need a new insight and also perspectives from experts to enrich the policymakers' strategy to tackle the COVID-19 impact. On this remarkable forum, allow me to share with you about the impact of COVID-19 to the economy. Second one is policy measures in financial sectors to tackle COVID-19 impacts. And the third one, the challenges and future financial services sector. Ladies and gentlemen, over the past 6 months, our life has been changed dramatically. We have stringent lockdowns as implemented by most countries, resulting in even larger disruption and hit the business sectors, which caused economic fallout. The release of global economic growth and the data that we see on the second quarter of 2020, it shows a profound contraction of the global economy as a result of the COVID-19 pandemic. And this is the worst since the Great Depression that we have a century ago. Indonesia remained grateful that although economic growth has contracted, it is not as severe as other countries, like our neighboring countries such as Singapore, Malaysia, and also the Philippines. In this time, we know that consumption and services have dropped significantly as the key sectors have been affected. We see the quite significant affected for travel and tourism, also retail and other services sectors. Business operations and supply chains also disrupted, causing the increase in unemployment and also risk on livelihood. The COVID-19 outbreaks has diminished our chance of prospect economic recovery from the broad global slowdown last year. However, we know that as economic gradually reopened, the real sectors indicators have shown some improvements. Distinguished ladies and gentlemen, the COVID outbreak is impacting the economy simultaneously through 4 different channels. The first one is that demand side shocks. We have a negative impact on consumption and also a negative impact through value chains as business experience lower demands. Or we can say the buyer or customers going into bankruptcy and resulting in payment delay or even default. The second one is a supply side shocks. We see the declining in the availability of the labor of firms because they have to close and stay home. And also we have decline in the productivity as workers are less efficient because they have to adapt to the new working system. The third one, we also have financial shocks. Financial services are very cautious to provide bank funding or commercial lending. We see the deterioration of credit conditions from banks and also from non-bank financial institutions arising from all over curtailment of financial intermediation. And lastly, the fourth part is higher uncertainty. This is because of lower investment. Because of the higher uncertainty, we experience lower investment and also lower appetites for risk associated with innovations and also entrepreneurship. These shocks will jeopardize the financial sector stability if the intervention has not been met early. So therefore, financial authority in Indonesia has released many preemptive policies to prevent a crisis in the financial sectors. OJK, as a financial sector authority, has released a series of fundamental policy measures which focus to curb volatility in the financial market and to give relief to the real and also informal sectors that is affected by COVID-19 pandemic. And we do this by a good coordination with the government and also with the central bank. The loan and financing restructuring and policies about this are the fundamental stimuli as it has provided more space to survive to the affected debtors and also to the banking or financing companies. We give this relaxation for 1 year. Further, it also allows banks to postpone additional provisioning for loan defaults to have extra room for their capacity, for the capital adequacy, to cover potential risk, and to preserve their lending capabilities in order to have a recovery in our economy. So far, restructuring has been implemented by about 100 banks and about 180 finance companies. For banks, as of August 24 in 2020, there are 7.19 million debtors with the outstanding value of Indonesian rupiah 863.6 trillion, or equivalent to 58 billion US dollar. This is the restructure that has been approved. And among those, about 5.67 million debtors are micro and medium small enterprises with outstanding value of 355 trillion rupiah, or approximately 24 billion US dollars. And for finance companies, as of 8th of September, we have 4.5 million debtors that have been approved, and also the restructuring with outstanding value of 166.94 trillion rupiah, or equal to about 11.6 billion US dollar. The government has also taken a policy package, including the placement of fund in banking to provide loans to the real sectors with a lower interest rate. The government also have the policy for interest subsidized and also loan guarantee scheme to boost credit disbursement to accelerate the economic recovery. Let me share with you the realization of fund placement in the banking industry as follows. Fund placement in state-owned bank of 30 trillion rupiah has disbursed as much as 110.4 trillion, which is 368% realization. And this have been given to 1.3 million debtors, as this is data for September 7th, 2020. And fund placement in regional banks of 11.5 trillion has disbursed to 1.58 trillion rupiah to 3,559 debtors. And this is our data as of 19th of August 2020. Moreover, OJK issues additional measures to further support the capital and liquidity of banking industry. We have the policy for deferral of the application of Basel III standards to January 1st, 2023, to ease pressure on the capital and also liquidity of the banking industry. In terms of capital support policies, the stimulus policies consist of suspension of the CCB until March 31st, or capital conservation buffer until March 31st, 2021. And also deferment of the assessment of the equality of foreclosed collateral, or in Bahasa we call it AIDA, until March 31st, 2021. And also lowering the minimum of liquidity coverage ratio and net stable fund ratio to as low as 85% until March 31st, 2021. And another one is a reduction in provision rate of performing loans, or in Bahasa we call PPAP umum, for rural banks, and relaxation of interbank funds placement for BPR or rural banks, exclusion of 30% of capital legal lending limits or BMPK for liquidity difficulty resolution. These policies complement Bank Indonesia quantitative easing measure through various schemes to provide more liquidity in the market, such as by government bonds purchase on the primary market, lowering statutory reserve requirements, both primary and secondary. I'm delighted to say that various preemptive policies rolled out by OJK have been able to strengthen the financial services industry and increase its resilience in navigating through the COVID-19 pandemic storm. OJK credit restructuring policies for the banking and non-banking industry were able to maintain the capital adequacy ratio of these institutions and hence contribute to the improvement of stability in the financial sectors. Ladies and gentlemen, on the capital market front, it is heartening, or we are quite happy to see that the market volatility was declining since May this year, and market confidence has been substantially improved. As Pak Inarno also mentioned earlier, we have a lot of companies, new companies come to our market. This is, as reflected in the number of new issuers, which has tripled with the past 3 years. And also, we are very happy to hear that and to know that we have a very wider base of domestic retail investor right now. We have about 3 million investors and this is significantly growth within the last few years. So this is a good and a very good hope for us in the capital market. Distinguished ladies and gentlemen, the main challenge in the pandemic is how we can deal effectively with the pandemic so that people's economy activities can be gradually reopened and minimize the damage of the economy. Another challenge are how then we can boost goods and service demand. The adequate level of liquidity in the economy did not absorb by private or real sectors, indicated by low loan growth. So in OJK, we monitor about the liquidity in the banking. The liquidity in the banking is quite ample, but the problem is the demand is not there. So this is a challenge for us, how then we can try to increase the demand. And in my opinion, when we try to increase the demand, it has to be the ability in the market on the people to really absorb the product in the market, whether in real products or financial products. So this is another challenge. And another one is also shifting consumer behavior and business activities, dependency on the massive use of technology. Now we know that even before the pandemic, we already start to see the digitalizations of businesses in Indonesia and all over the world. So with the pandemic, this is another boost up for us, and to see that the businesses in Indonesia, has been pushed even forward to use technology. And this is the challenge for us, how to digitalize our economy and how to digitalize businesses in Indonesia, whether it's banking, capital market, or non-bank financial institutions. Addressing those challenges, OJK and the governments are in the market, meaning that we see the market, we try to see what market needs, so we are ready to issue any necessary policy to prevent further deterioration on our economy. And on the fiscal side, fiscal policy is the key to provide stimulus to create demand, such as social aids, incentives, and accelerate government spending. Financial industry stands ready to be the catalyst to boost the purchasing power of the people and support the real sectors. Secondly, we are not only focused on recovery, but also the transformation of the economy and financial structure through massive digital transformation, as I mentioned earlier. And this have to happen all across the sectors in the economy. We have shifted the economic activities from contact intensive to less contact economic activities, including in the financial sectors. Ladies and gentlemen, in closing, I would like to express again my appreciation to all who have made this event possible. I hope that today's discussion will be fruitful and can positively contribute to the national economic recovery. Hopefully, the research presented here today and also tomorrow can offer solution or research-based policy recommendations to the government and to regulators in Indonesia. Finally, allow me to officially open the 16th Indonesia Financial Association Conference by saying Bismillahirrahmanirrahim. Thank you very much.
Thank you very much, Mrs. Nurhaida. And the 6th Indonesian Finance Association International Conference is officially opened. Thank you, Mrs. Nurhaida. And before we close the opening ceremony, we will have a short photo session first. For a moment, please kindly, all the panelists, please turn on your camera for a photo session. We'll have a short photo session first. Okay, are we all ready? You can smile to the camera. Okay, I will count to 3. 1, 2, 3. One more. We're going to raise our hand as a symbol of our spirit for the first day of conference. Everyone can raise their hand and make a fist in the air. Okay, I will count to 3. 1, 2, 3. Okay, thank you very much, everyone, for all the panelists. Thank you for Mrs. Nurhaida for the keynote speech. And ladies and gentlemen, after this, we will have a short break for around about 5 minutes. And after the break, we will have a plenary session with Professor Gonri. Thank you very much. So, ladies and gentlemen, after this, we will begin the plenary session presented by founding editor of Pacific Basin Finance Journal, University of Hawaii, Professor Gonri, with the topic Dividend Policy and Corporate Governance. Please welcome the moderator for the plenary session, Dean of Faculty of Business and Economics, Universitas Surabaya, Dr. Putu Anom Mahadwarta.
Okay, good morning, everybody. Thank you very much, Yolanda, for the time. Good morning, distinguished participants. Prof. Gondry also here with us. So today we are going to listen and take a careful listening up to the Prof. Gondry said about corporate governance and dividends policy. So this is a quite very interesting part of our topic in corporate finance, because we will know that Prof. Gondry is also very distinguished with his paper and his issues in dividends policy and corporate governance. Please welcome Prof. Gondry. Time is yours. It's about 60 minutes for the presentation, and then we have a Q&A. Thank you very much. I'm sorry, you're still in the mute. Please turn on, yeah.
Thank you, Dr. Putu, for kind introduction. And also taking this opportunity, I'd like to thank Professor Ilwan of University Indonesia and Professor Eduardos of Gajah Mada University for inviting me as a keynote speaker this morning. And also I really enjoyed Mr. Inarno's opening presentation, and also Ms. Lua Haida's very informative presentation this morning. And I felt I learned a lot about current status of our Indonesian economy and the financial markets. And now I'd like to ask Dr. Putu whether I can have control over the PowerPoint file I'm going to use.
Yes, Prof. Gonri.
Yeah.
Yes, the PowerPoint is already here. Maybe the...
Yeah, I'd like to share the PowerPoint file I have, and then I will go over that. Is it okay?
Yes, of course, Prof. Gondry, you can share your PowerPoint.
Yeah.
Okay.
Somehow I don't see.
It's already shared, Prof.
Oh, you are seeing my PowerPoint file?
Yes, yes.
Oh, thank you so much. Yeah. Yeah, as Dr. Putu mentioned, I'm talking about corporate governance and dividend policy, and my talk is based upon ongoing research work with Dr. Devi Bhattacharya of Duquesne University and Dr. Wei Sin Lee of National Taiwan University of Taiwan. And so I'm very happy to have a chance to present this paper today. Somehow I cannot control. Somehow,
Prof. Gondry, maybe the committee can help you to share your PowerPoint.
Okay.
Okay, so you can just say next if you want to move to the next slide, okay?
Okay.
Okay.
So everybody,
Ms. Yolanda, can you help us to share to the
I don't know
committee?
what I'm looking at without me controlling the PowerPoint file.
Okay, we will try to
now
take over.
that
Okay,
good,
yeah,
good,
it
good.
works now.
Now
That's good.
it responds. Thank you so
Okay.
much. Yeah. So usually I prepare one slide to summarize what I'm going to do in my presentation. And as you see here, we are looking at the relation between corporate governance and dividend payout. And as you see here, if they are substitutes, then their relation should be negative. And if they are complements, then we should expect a positive relation between the two. And as I summarized here, when we look up the current literature, we have two opposing views. So I cited Hugh and Kumar and John, Kneziva and Hobok and Pravala, and they expressed their view that the two, so corporate governance and dividend payout are the substitute. In the meantime, as I cited in another set of our papers, they think corporate governance and dividend payout are complements. So that means good governance will encourage dividend payout. And then the first view, good governance discourage dividend payout. So that's why we see negative relation versus positive relation. And the main point in the paper is actually both views are correct. If we can take a look at the fund level idiosyncratic risk. So depending upon the level of our idiosyncratic risk, we may have both cases. So this whole paper is built on this particular assumption here. When I was an MBA student, I learned the composition of our total risk, usually decomposed into systematic risk, which is undiversifiable, and then unsystematic risk, which is firm-specific the risk, or industry-specific risk, which is diversifiable. And I don't know exactly when it happened, but somehow idiosyncratic risk came in, and then everybody started using these two terms interchangeably. So unsystematic risk and idiosyncratic risk are together. So throughout this paper, I will be using idiosyncratic risk as the main term in my presentation. So what we learned and also what we teach in finance, we tell when market is complete and frictionless, then idiosyncratic risk doesn't matter. So only systematic risk matters. But recently we had a paper by Ang et al. When these papers were published, they were at Columbia University, and they found a negative relation between idiosyncratic risk and stock returns. So the first paper, Journal of Finance paper, dated 2006, they looked into the US market, and then the JFE paper in 2009, that paper, they looked at the international markets. And so they found negative relation between idiosyncratic risk and stock returns. So that means market is not really frictionless or complete. So based upon my understanding of our current literature, idiosyncratic risk has been extensively studied in two different areas in the finance area. Number one is short sale literature. Number two, investment literature. So looking at the short sale literature, I cited Miller's paper, 1997, in the Journal of Finance. And please don't get confused with Morton Miller, the 1990 Nobel laureates from University of Chicago. His name is Edward Miller. He got PhD from MIT and in 1970, and then I think this is the only finance paper he published. And of course, he had the papers in dealing with gender issues and all that, but gambling and all that. But this is the only finance paper he published. And in his paper, what he advocated was when securities are short sale constrained, and also investors have a disagreement on the value, then what happens is those people who had the negative view of the stock's perspective, they stay on the sideline. So that will cause the stock price overvalued. And once it's resolved, then what happens is stock returns become negative. So recent paper by Boime et al. In JFQA provide very nice thorough study on this issue. And also this idiosyncratic risk is normally used as the proxy for divergence of investor opinion. So that's one area of our research. I see the idiosyncratic risk becomes very important. And then another area is the investment literature. And I cited DiMarzo, Fishman, He, and Wang's paper in Journal of Finance, and also Panucci and Papanicolaou's paper in Journal of Finance as well. Both of them published in the same year in 2012. And then what they were saying is, with an increasing idiosyncratic risk from investments decline. And actually, these two papers are the kind of guiding light for me and my co-authors to write this paper. So our empirical predictions are like this. When company faces high idiosyncratic risk, they tend to underinvest. And that's when corporate governance kicks in. So good governance will discourage dividend payout so that the company can divert more money into productive investment projects. But when idiosyncratic risk is very low, and then the management tends to overinvest. And that's when corporate governance comes in and then encourage payout policies and encourage their companies to pay more dividends. So this is what we are seeing in terms of the overall prediction, empirical prediction. So now I can have a complete summary of our picture right here. So what happens is when we have a high idiosyncratic risk faced by the corporations, the relation between the corporate governance and dividend payout will be negative. They serve as substitutes. And when we have a low idiosyncratic risk, and so when company has a overinvestment cases, then good governance and dividend payout will be serving as a complement. So this is the complete picture of my paper or my talk today. So now what we have to do is we have to provide strong empirical evidence in support of our theoretical prediction. So as you see here, we are getting lots of information from CompuStat tape, and then crisp stock price data, and then most important of all, the corporate governance index. You see we have industry corporate governance quotient. So ICGQ, this is the corporate governance index we are using. And in my opinion, this is the most comprehensive and multidimensional index, corporate governance index, using 64 different variables. and very extensive. And unfortunately, the problem is risk metrics, they changed the way they compute this quotient. So we can use this data only up to 2009. So from 2003 through 2009, we have a wonderful comprehensive corporate governance index. So we will be using this, and then we also use some other variables like CEO ages and CEO inside debt and so forth. So that's coming from exec.com database. And so most binding constraint for us is the short period is governance data available. So what we were trying to do is, as you see here, originally the analysis is for the 7-year period, but we are trying to allow the other kinds of corporate governance indices so that we can expand the study period up to 2014. And we do have some trial analysis of more recent period using other kinds of corporate governance indices. And so the results are the same. So in this paper, we just use this information here. So even though this is ICGQ, the governance index we are using for the limited study period, it includes almost 5,000 companies. So that means much, much broader base than S&P 1,500 companies. And also we have almost 17,000 4-year observations. And so we are using this data as the main base for corporate governance. But as you see here, for extended period, we use many different kinds of corporate governance indices. So I will be talking about them a little bit later. So here we have a summary statistics of corporate governance and also idiosyncratic risk, depending upon whether we have low idiosyncratic risk companies or high idiosyncratic risk companies, or companies are dividend payers or not dividend payers. So just looking at these numbers, it may not be clearly you get the message here. So I have a quick summary here. So usually what we find is dividend payers, they do have a higher governance scores and then lower idiosyncratic risk. And then usually the dividend payers, they do have a higher profitability, and then firm size is larger, and growth rate is relatively low than the non-payers. And then when we compare the companies with the low idiosyncratic risk and high idiosyncratic, we can bring in more idiosyncratic risk companies tended to have a higher governance scores and higher profitability and larger size companies than higher idiosyncratic risk funds. And then when we looked at the asset growth, it was not very clear. So that we couldn't find any specific trend among our data. So now what we are doing is we are using standard logic regressions. So the dependent variable will be a dividend payer. So if it is a dividend payer, we assign 1, if not 0. And then we have a corporate governance index, ICGQ, and then idiosyncratic risk. And then we have an interaction between corporate governance and idiosyncratic risk. And then we have lots of control variables. So as you remember, the Pharma and French in 2002, they had the one very nice empirical paper on disappearing dividends. And actually the variables we use and all that are very similar to what they did. But anyway, the main hypothesis we are looking at, based upon this logic model, we are looking at this interaction term, and we want to see whether the other coefficient of this interaction term is negative. So what does it mean, negative interaction term? So here, actually, let me go over this slide and then go back to the results. And as you see here, negative coefficient of interaction term means when idiosyncratic risk is high, good governance will discourage companies from paying dividends. So that's what it is. And then when idiosyncratic risk is low, then good governance companies will have encourage the higher dividends and all that. So that's why substitute versus complements this idea coming in. And as you see here, when we look at the other interaction terms, both of them are significant and negative. So that means the depending upon the level of idiosyncratic risk, we can have substitute or complement situations between the two variables. And very often, I encourage my PhD students to use quintile or decile regressions. So what we are doing is we rank all the independent variables, and then we create the quintile or decile, and then using the apply the quintile regression or the decile regression and all that. And so that way, what we can gain is the regression results wouldn't get affected by few extreme outlier observations. And also another important benefit is another important variable benefit is we can use this quintile or decile regressions to see the benefit of economic significance. So when we use the quintile regression, looking at the high idiosyncratic risk quintile, when somebody's calling from Taiwan at this moment, but I'm going to ignore, sorry. So when corporate governance moves from the weakest to strongest, we see as expected, a dramatic decline in the probability of a dividend payout, almost 30%. And then with the lowest idiosyncratic risk quintile, when governance moves from weakest quintile to strongest quintile, we do have almost 25% increase in the probability of our payout. So this is the nice summary of our results. And then another thing we did was looking at the on the investment case and over investment case, what we are doing is we look at the CEO age, and usually younger the CEOs, they are more aggressive. They love to take risks for the benefit and all this. But once we have older CEOs, they become very cautious. They don't want to take risks. And same thing with the CEO personal leverage. And when we come up with the personal leverage relative to company's leverage, coming from Sandran and Yormark's paper, and then Wei and Yormark's paper. And what we are seeing is somehow those executives who are risk averse, they tend to show the more the stronger negative coefficient we are seeing. So in this case, given high idiosyncratic risk, we know the management tend to underinvest. Now, the higher the risk aversion is, as indicated by CEOs older age or CEOs higher the personal leverage, what we are seeing is only those cases would have a very significant substitution effect. So that's what we are seeing here. And then when we go to the overinvestment case with lower idiosyncratic risk, and we are using free cash flow, two different definitions of our free cash flows to measure the degree of our overinvestment. So one is Kenneth Land and that person's measure. And again, and also the other one is Lloyd's et al.'s paper in Journal of Accounting and Economics. And so using these two different measures of free cash flows, what we are seeing is only those companies with large amount of free cash flows. That means the overinvestment situation, we see this kind of negative coefficient of interaction costs. And so that's what we are just confirming in reality what's happening to the theoretical prediction of the relation between corporate governance and dividend policies. So of course, we have to do the lots of robustness tests. And as I mentioned, we wanted to use many different kinds of corporate governance index. So what we are using here is the main variable corporate governance index is replaced by other governance measures. So number one is the pay performance sensitivity, what we call delta, developed by Core et al.'s paper in accounting, a JAR paper, and it measures this delta measures the degree of our alignment of our management and shareholder interests. And then another one is the inverse entrenchment index compiled by Babcock, Cohen, and Fuller. And then big four auditor firms, and then we have institutional shareholders. And so when we introduce this kind of alternative governance measures, this is what we are seeing. So again, as you see the interaction term between governance and idiosyncratic risk, they are negative and significant. And also when we take a look at the institutional investor, number of institutional investors, same results we are getting. The funny thing is big four auditors, we don't get it. And my suspicion is Arthur Andersen, do you remember the big fiasco we had in 2002? And somehow the Enron related the scandal. And I think, so in this big four, actually Andersen was part of it. So when Andersen was included there, we had the big five actually. And then after the Andersen went bankrupt, we have only big four. And so my suspicion is Arthur Andersen has something to do with this unusual results. But when we look into the robustness test during the post-Sarbanes-Oxley Act years, so from 2013, 2003 to 2014, what we see is everything becomes negative, including big four auditor. So that means without Arthur Andersen, everything becomes normal. So that's what we are seeing. So we were kind of amazed with these results, and It's not our own manipulation, but that's what we are observing. And then, of course, in connection with dividend policy, we take a look at stock repurchase and also total payout, which is combination of stock repurchase and cash dividend. And the results hold no matter what. So what we are observing is idiosyncratic risk, and the interaction terms remain significant, but smaller magnitude with stock repurchase. And then when we have a large repurchase payers, the magnitude is stronger. So that's what we are observing. In the paper, we have a more detailed analysis reported and compiled in the table. So our major findings, as you see here, the relation between corporate governance and dividend payout, it depends on what's the degree of idiosyncratic risk that each company faces. And so as you see here, good governance companies are less likely to pay or initiate or omit or cut when idiosyncratic risk is high. And then good governance firms are more likely to pay, initiate, or omit or cut when idiosyncratic risk is low. So those are the kind of overall findings, empirical findings in support of our main hypothesis. I think that will be my presentation. So given we have a much longer opening ceremony, so I try to cut it down.
Okay, thank you very much, Prof. Gondry. Your presentation is an excellent presentation for me. There's also a Q&A on the chat, but maybe I can wrap it up a little bit about your presentation. The main point is very interesting about idiosyncratic risk. That's the very interesting part for me as corporate finance researchers, that corporate governance and dividend payouts depend on the idiosyncratic risk, and several robustness tests also. You did several of the robustness tests, and it shows a more, let's say, a stable result. So we have several questions in the Q&A. I will read it to you, or you can also open it in a Q&A chat box. We have from Anthony Cristanto, Mr. Anthony Cristanto. He asks about, this is his question. Do you think that percentage of ownership of controlling shareholders is the main factor of corporate governance and dividend payout relevant to the public investors' perceptions? So maybe he asks about the percentage of ownership of controlling shareholders, because as we know in Indonesia, we have a majority of our shares in stock market with controlling shareholders, and that controlling shareholders will become the main factors in the corporate governance and dividend payout. So what do you think, Prof. Gondry? The first question from Mr. Anthony Cristanto, please.
So are you asking, given different types of investors, individuals versus the institutions, whether our results will make any difference? I'm afraid I missed your point. Huh?
So he asks about, what about the percentage of ownership for controlling shareholders? Is that also the main factors for corporate governance and the dividend payouts?
Oh, definitely, we are here, the corporations are here to serve shareholders, and also given whatever the level of idiosyncratic risk the firm faces or management created for the company, we have to be flexible in terms of how we deal with shareholder wealth maximization.
Okay, because in Indonesia, the point about shareholders usually between majority and minority shareholders. Like Laporta Silanes already said about the protection for minority shareholders, Prof. Gonri. Maybe that's the point of Pak Anthony question, because more ownership for controlling shareholders means that maybe there is a chance that minority shareholders can be, let's say, hurt or something from their welfare. So how about what do you think about that, Prof. Gondry?
On the basis of what I presented in this paper, I'm afraid I cannot really answer that specific aspect of minority versus majority shareholder, the competition or confrontation. But in general, what we are trying to say in this paper is the critical variable would be the company's idiosyncratic risk. And then depending upon the level of idiosyncratic risk, we will see the over or under investment situation. And that may or may not be the best for the minority shareholders. But in general, what we are seeing is the companies, we can advocate what companies can do to protect the shareholders the benefit. And I'm afraid we cannot go in any further than that.
Okay, Prof. Gondry. So that's the main, usually the main problems for Indonesian firms in a capital market, because we paid less dividends than several research from the Asia Pacific as well. So,
it's not that common
the
in
chair.
Indian companies.
Yeah, Prof. Edward Sterling, please.
Yes, okay. Maybe I just want to add something, Prof. Gundri, because in Indonesia is hello, can you hear me?
Yes, Prof.
Okay. So from Indonesia, because the Indonesia, if we try to see about the agency conflict, okay, mostly between the majority and the minority. The second thing, also Indonesia, okay, is included as a country that have low investor protections, okay, and dividend policy want tools that can decrease the conflict between the majority and minority. Okay, so in this case, I think in Indonesian case, what do you think? It's maybe it's the possible that the corporate governance will discourage, because the corporate governance can also decrease the conflict between the majority and minority, right? But in the same time, the dividend policy also can try to decrease the conflict between the majority and minority. So, do you think this situation can also happen in Indonesian case? Means, what do you think is will be discouraged or okay encourage the dividend policy for Indonesian case? I mean that the corporate governance will discourage or encourage the dividend policy for the most Indonesian company. Because what Pak Anom said, most of the Indonesian company, the ownership so concentrated, is not dispersed, right? So the conflict usually between the majority and minority is not between the agent and the principals.
Yeah, I see
Can you
your
get it?
point. Yeah, yeah.
Yeah.
So ownership structure is very different in Indonesia when we compare that with the other advanced markets. So given this coexistence of minority shareholders and major shareholders who are the owners of the companies effectively, and how do we settle the dividend policy issue? And upon hearing your question, I feel we are going beyond the scope of what I presented, and that's not what we really addressed in the paper. That's something we may have to uh, worry about as we use the Asian market data or Indonesian market data to address whether the idiosyncratic risk will be some kind of good indication of companies overall under investment. And I'm sure given the situation in Indonesia, there must be lots of interesting complications we have to worry about. But I'm afraid I don't have a very clear-cut answer for something specific for Indonesian situation.
Okay, thank you.
Okay, thank you, Prof.
Pak
Gandri.
Anom,
So that will become the question, the big question for Indonesian researchers in corporate governance. So thank you very much. And then we have also from Mr. Luffy Setia. So I read the second question first.
Okay.
From company point of view, what can we do to mitigate or limit the idiosyncratic risks? Please, Prof. Conry, the second question about point of view from the company's point of view, how to reduce or limit the idiosyncratic risks.
Depending upon the management attitude, the level of idiosyncratic risk could be very high or could be low. And that doesn't mean one approach is better than the other. And it depends upon what the corporation's major objectives are. And so as long as we have kind of appropriate policies to protect the shareholders, I think that's the only thing we have to worry. I wouldn't say the high idiosyncratic risk is bad or low idiosyncratic risk is worse. I'm not saying that, but depending upon the level of idiosyncratic risk, we may have to think about what would be the best way to protect their shareholders.
Okay, so the basic point is how the companies will manage their risks. That's the main point. How they doing their risk management, and that's will mitigates or limits the idiosyncratic risks. And the first question is for maybe for Director of the Capital Market, Pak Inarno. Do we have similar industry corporate governance quotient index in Indonesia? That's the question.
Oh,
maybe
that's
this
nice.
is
Yeah,
Mr.
that's
Luke,
nice.
maybe the researchers for corporate governance or the doctoral students. So he asked about, do we have any corporate governance quotient index in Indonesia? Or if we don't have, maybe it's a good idea to let's create the index. That's the question. Please.
That would be wonderful. Yeah. I know when I visited Jakarta and Jakarta Stock Exchange and then corporate governance and related research center at the Jakarta Stock Exchange. I remember the overall index compilation has been done very nicely in Indonesia, but recently I lost contact with the people in the field on the field, so I don't know what's the current situation. But I'd love to see what can be done. That would be great, and I'm sure you have lots of comprehensive governance indices focusing on different areas. So
Yes,
if we
the
can
focus
have
is for
that kind of data available, then Indonesian market will be lots of fun to study.
yeah, because in Indonesia we have an index for corporate governance. One of the institutions that doing the index, sir.
Okay,
So
okay.
we have, but we don't have what we call as industry corporate governance quotients, but we have
Oh,
a
I see,
corporate
I see.
governance index. Yep, but and I also manage one of the index as well. So, using the our research in corporate finance,
Uh-huh.
that's the same as the main point is that the ownership is matters in Indonesia. So that's the main
Okay,
problems
okay.
for Indonesia. The ownership is matters. That's why our index maybe is kind of different with what you are using in your research, sir.
Thank you, Pak Putu. Yeah, we will
Thank you.
hopefully we will have that index. Thank you.
Mr. Winiarno, thank you very much. So hopefully that we are in a researcher in corporate finance also can contribute in this index. Thank you very much.
Thank you. Thank you. Yes.
Yeah, I love to
We have
visit Jakarta Stock Exchange to meet up with you and then meet up with the people who are working on corporate governance area index and all that.
yes,
That would be
of
wonderful.
course. And we also have question from, we have a lot of questions here from Gondry. We have a question from Pak Ahmad Mauli Nauva from Gajah Mada.
Okay.
He said he currently working on a paper related to ownership structure and dividend at stock discount and premium price. The difficulty is the lack of literature related to that relationship in the condition of premium or discount stock price. You have any suggestions, sir, for this problem from Mr. Ahmad Mauli Naufa from Gajah Mada? So it's about the premium and discount stock price.
Something I noticed from OECD report dated 2018, Indonesia has unusually high number of the major shareholders who controls the other company's share ownership, and a lot more so than other Asian countries. So I see some common trend between Philippines and Indonesia and Thailand, and unlike the Japan, Korea, and Singapore. And so I think given that kind of unique situation, we would love to see how the ownership structure can affect the overall the governance, corporate governance issues and all this. And depending upon which area we look into, I'm sure we will have interesting projects to undertake.
Oh, thank you. So, Mr. Ahmad Maulin, you can do the research with Prof. Godfrey. You're very interesting about your research. Actually, I also have a research about this stock price premium and stock price discount that about 5 years ago, I'm doing it for our index in the corporate governance index, but we don't do it with the dividends policy. But that's a very good research, Mr. Ahmad Maulin. Thank you very much for your question. The next question is from Prof. Tri Gunarsi. Oh, Prof. Tri, could you please inform us about corporate governance indicators in your study? So since the governance could be seen as structure and index as well. So Prof. Tri Gunarsi is very want to discuss with you about the governance index that you use, governance indicators that you use, sir. Please.
So, Dr. Putu, can you repeat what you said?
Yes, this is the question from Prof. Tri Gunarsi.
Okay.
Okay. She asked you about the corporate governance indicators that you use in your study. Because in your study, the governance index could be as an index and also can become a structure of a policy, something like that. So can you explain more about your indicators of the corporate governance index?
As I mentioned, this is, even though the limited period is available for this comprehensive data, but it is a very comprehensive and multidimensional index. And so that's why I like this particular index we use for the period we studied. And then we use other indices to expand the study period. And to be frank with you, we struggled a little bit because of our limited study period we have for this study. But as far as my main interest is concerned, if we can create an ideal comprehensive indices for corporate governance, I think we can do lots of meaningful studies. That's how I feel.
Okay, thank you, Prof. Gonri. The next question is about still about the ER, modify ER. So, Pak Johannes Edward want to ask you how is it possible that corporate governance can significantly modify the idiosyncratic risk for the firm? Is it possible to modify the idiosyncratic risk? Let's say affect the idiosyncratic risk using corporate governance. That's the main question of Pak Johannes Edward. Please, sir.
So his point is, can we utilize these indices to improve the whatever the shareholder wealth and all that, and that's main point.
Yes, so the main question is about idiosyncratic risk, because we have several questions also about idiosyncratic risk. It's how you measure them. Maybe it's more, we can see them in your paper more detail. Okay, so do you think that maybe this is let's say from your point of view as researchers in corporate governance and corporate finance, what can we do as a corporation, or what the corporation can do to have the solution of this pandemic? Let's say to decrease the risk of being bankrupt or financial distress, and is that the corporate governance can do something about that solution? That's maybe the question from Mr. Sujono. Please.
Yeah, at least if we can have high quality governance measures for the protection of our shareholders and also for the protection of our management to a large degree, well, definitely it is possible, and of course it's an empirical question whether the certain subset of governance indices would be more useful for corporate bankruptcy cases and all that. But I think we can do a lot once we have a comprehensive index data, and not just the focus on one area. We can focus on 10 different areas, and then we come up with the strength and advantage of certain indices for depending upon which area of our management we are looking at.
Yeah, for us in Indonesia, for the question about corporate governance that can how to give the solution effect, it's not the solution about how the corporate governance give you a solution for pandemic, but the corporate governance from Prof. Gondry already said that it will give you let's say the path, the road to pass this pandemic using a very much less risk, and also not increasing risk of usually the idiosyncratic risk and also undiversifiable risk. But as already said before from Mr. Anthony Cristanto asks about the percentage of ownership to controlling shareholders to idiosyncratic risk. Let's say we all agree that several companies will have much more higher idiosyncratic risk because maybe they will have higher corporate governance. From your point of view, Prof. Gonri, and also I basically involve all this Mr. Anthony Cristanto, Mr. Sujono question that do you think that the higher of our controlling shareholders that will affect the corporate governance in Indonesia? Can we say that we should make our idiosyncratic risk higher? As your research said, that idiosyncratic risk can become higher and then it's become a substitute for dividend, because on average our dividend is very low. Is that possible to become a issues in let's say enhance the research of corporate governance? The corporate governance, the ownership controlling shareholders, and also the idiosyncratic risks. Maybe for us, we have a substitute effect in Indonesia. Please, what do you think, Prof. Gonri?
Yeah, I wish I knew a little bit more about Indonesian situation. For example, when we estimate idiosyncratic risk, one simple way is we just use the single factor Markov model and then generate residual returns and then get the variance of that numbers. Or we can use the three-factor model or Farmer French five-factor model and all this. But I don't know how good all those factor-related impact analysis has been done in Indonesia. And so depending upon, assuming we do have a good solid model to estimate idiosyncratic risk properly, and then we can address the many issues from management viewpoint, whether this is excessive or not excessive and all that. So there will be many interesting aspects we can look into.
Okay, thank you very much, Prof. Gondry. So for us, this is a very interesting discussion because we can discuss with you as expert in corporate governance, the researchers, the distinguished researchers of corporate finance, and also here we have Prof. Eduardo Standelilin as well, my guru. Prof. Ted, you have something to say to Prof. Gondry, please?
Okay, Pak Anom, I think Pak Leo want to ask something. He raised his hand.
Oh, yeah, Pak Leo, okay.
Yes, thank you, Pak Anom. I thought I could type my questions. In fact, as a panelist, I cannot do that. Yes, Prof. Gondry, I think your study result is very insightful for me. And as you know that I myself have some research, published research in dividend policy. And
Okay.
I think your study has provided a missing piece in the dividend literature realm, I think, because I remember when I met Professor Kosjon of NYU, he asked me to redo the famous LLS fees study because he doesn't believe that that the study proved the complementary hypothesis instead of substitute one. And I think you found it. I mean, you give me the answer that the idiosyncratic risk is the answer for me. However, I would like to ask you a couple of questions maybe. First is I would like to ask you about your insight about the independent board of directors as the internal, I would say internal governance mechanism, because I saw that you use the auditor and use some governance index. That's the first. And the second one, actually, I have a concern with the potential endogeneity issue between the IR and the governance. We know that maybe the governance can influence the IR and the other way around. And the last will be my comment. I think this will be very interesting if we could extend the sample and to give an evidence about the substitute versus complementary hypothesis, because for myself it's quite confusing. And again, this is your study is very insightful for me. Thank you.
Thank you for your point. I guess depending upon how we can do with the I wouldn't say we can come up with the optimal level of idiosyncratic risk, but that's just kind of consequences of a management decision. But given companies the history, we should be able to see whether the current level of idiosyncratic risk would be optimal or it can be raised further. And there are many interesting normative way of thinking we can do.
Mr. Paleo, you're satisfied with the answer?
Yes, I would like to have discussion with Prof. Gondry, but maybe because of the time.
Yeah.
I think that's good for me.
You can ask me any question through email and all that. That's okay.
Yeah. I would love to do that. Yes.
Thank you.
Yeah. Thank you, Dr. Pak Leo. Thank you very much for your question. We still have one question left for this Q&A. It's from Pak Dwitya Aribawa. He asks about the minority shareholders and active.
Somehow I cannot hear you very well.
Aputu, I think the connection is not very stable.
We generate from the shareholders that recently. Okay. So you can hear me now? Okay. So.
Oh yeah,
can you hear
right
us?
now it's clear. Okay, maybe you can repeat the question.
Pak Dwitya Ariba about how the domestic individuals become the activist shareholders and join the public companies that he said which have a bad, let's say, a low corporate governance. What will happen if the activist shareholders join these companies? Is it possible to, let's say, research your hypothesis again in Indonesia? Thank you. Please, Prof. Gondry.
Prof. Gondry, did you get the question?
Somehow I cannot hear very well.
Okay, Pak Putu, maybe I can read the question from the
Okay.
Q&A. Okay, I will help read the question. The question is, how about the minority shareholders and activist shareholders that recently come from domestic individual in Indonesia in some public company which have not really good reputation for the corporate governance?
So you are referring to minority shareholders movement to protect their positions in
Yes,
some
it's about the
companies.
activist shareholders, sir.
Yeah. That's very important question, and I wish I knew a little bit more. So you have some systematic campaigning by a minority shareholder group in Indonesia now?
Yeah, what Pak Dwitya said that he researched about these activist shareholders who have a very strong will to involve in a, let's say, not too good corporate governance firm, let's say like that. So the activist shareholders usually a minority shareholders. That's what the research from Pak Dwitya Aribawa say.
Okay, okay.
So is that maybe it's possible to using your hypothesis about the dividend as a substitute for let's say an increasing of corporate governance.
Yeah, definitely possible. Yes, yes,
Yes.
I agree.
Yes, but Vidya is one of the I believe is a doctoral student, so he will have a much more point of view now for his dissertation, I guess. Thank you very much, Prof. Gondry, and that will end of our session of Q&A. Thank you very much, Prof. Gondry, for the enlightenment of this corporate finance issues about corporate governance and all the idiosyncratic risks and dividend policy. And thank you, distinguished participants as well, the attendees, for all the questions. And I believe that we will have much good research in corporate finance that will support our capital market as well. Thank you very much. And I'm back to you, Mrs. Yolanda.
Thank you, Pak Putu, and also thank you so much, Professor Gondry, for the presentation. I'm sure that all of us has gained knowledge from the presentation as well as the Q&A session that we had before. So now we will end the plenary session for the first day of the conference, and all the attendees may have a break until 1 p.m. And after that, you may proceed to the parallel sessions that you wish to attend. So we wish everyone a fruitful conference, and we will see each other again probably tomorrow for the second day of the conference. Thank you so much for participating in the first day of the 6th Indonesian Finance Association International Conference. Thank you so much.
Thank you,
you.
Okay, thank you, Gondry. Thank you. I'm waiting for you in Yogyakarta.
Bye, bye.
Okay, so I think we have just, finished 30 minutes earlier, right? Okay.
Something I was impressed was you have a large number of our participants still listening to the presentation and Q&A sessions and all that.
Gondi, you know that the student cannot join. They watching you from live streaming YouTube.
Oh, okay.
Yeah, still a lot.